gather all those recordings and rewatch if you want to touch up on anything that you heard or you missed. All right. Well, hello and welcome, folks, to another Tuesday night of credit banking and the search for the lost American dream. Now, the great thing about what we're going to be talking about tonight is being prepared and aware when using credit banking, because things can happen. This is taking place this recording tonight is November 3rd, 2020. And there you go, Richie. You can probably start your camera now. But what's important is there's a presidential election taking place right now. And regardless of what happens, first and foremost, as Americans, the best thing we can do is respect whoever's in office. Myself, I'm going for one person, and then if the other person wins, I'm gonna be like, maybe next time. But I will respect him because, hey, that's our president. We have to respect him, regardless if I agree with it or not. Now, you can use these systems and these aspects of knowledge to your advantage. And like my amazing friend, Mr. Joseph Smith, would say, go out there and create your own economy. So we are no longer reliant upon the banks, the financial institutions, or somebody on Wall Street or people in Washington to make some type of change for you. We have to regain the control. And we first start regaining that control by gaining the knowledge, because that is where they have us captive. And once we understand these systems, we will leverage them to our advantage. So tonight we have my buddy and good pal, Mr. Richie Glars Pankos, and he's going to be talking about being prepared for those situations. And fun fact, actually very interesting fact, Arizona and Hawaii don't actually change with daylight savings. So, as like the year changes and, January 2nd, you're still writing like 2020 and you're like, oh, wait, no, it's going to be 2021. That happens to us twice a year where we're like, oh, wait, Pacific is now an hour this way. East Coast is now 2 hours. We have to shift our entire world. Everybody just changes their clock one time. So I'm glad you all are here tonight. I'm excited for what Richie has to share with us. Mr. Richie, take it away.
Right on, Ray. Thank you so much again for having me. I just love my Tuesdays now. It's just been so fun. Looking forward to being able to be on these webinars with you and just be able to spread the knowledge, spread the awareness of what Wise Guys and Ties is put together, and partnering up with the other programs out there such as Renatus and using the velocity banking strategy and just getting it out there. It's so amazing. And I would actually like to let you know that I'm almost done. I'm almost done with my videos, dude. I'm it's just like right there. So I'm gonna be going live, and I came up with an amazing name for it. Something that's been always in my brain ever since getting into this strategy, and I'm calling it "Level Up in Real Life." Number one, because I'm a gamer, and number two, I cannot I cannot really uh, show enough gratitude to knowing about this stuff, so I too can level my life up. And it's not just playing the game on TV anymore. It's actually playing the game in real life, and just getting that knowledge and leveling up to these different tiers of success, even starting from bare bottom. We have the knowledge, we have the control, we have the responsibility to get ourselves from level one to whatever level we want to be at. And so in Level Up in Real Life, it talks about the main three levels in using the credit banking strategy. And it's going to be so fun because uh, the Wise Guys and Ties are going to be the first group that is going to be able to use this as a tool to help people through their strategy. Okay, so excited about that. And this week has just been so busy doing that. I've been, believe it or not, I'm in my house, but it gets really noisy in here a lot with the kids and everything going on. We have our baby is about to pop here pretty soon. Due date is November 7th, but we're at that time where it could be at any time. And so we got
Holy
mother-in-law
smokes.
here. Yeah, it's so close. And so we got mother-in-law here. She's visiting. So what the best way I could actually do this is at the dead of midnight, I'm able to film these things. And so I got my Visine out, making my eyes, as white as possible while I'm recording. And these last couple of nights, I stayed up until like 4:30 in the morning, just pouring what's in my brain palace into the films. And I'm just compiling them all, putting them together so that way we can make it a nice, sweet package for every single level. You, as users, can actually choose and then go from there. It's so fun and so amazing. So I'm super excited about playing this game with you guys and with Wise Guys and Ties. It's gonna be so fun.
This is going to be amazing. And those of you who are just tuning in, like, this is how you can strategically implement this into your life. And if you were like me or Richie, loved playing games, those cheat codes, those financial cheat
Yes.
codes, this is like the cheat codes to personal finances.
Yes, I love it.
Good
That
stuff.
is brilliant. Yes. Oh boy, now I'm gonna start adding cheat codes to this. Like, how do we put a game genie to level up in real life? And velocity and credit banking. What Game Shark codes can we pop into this?
Oh my
So
gosh.
this is gonna be so fun. Anyway, so I wanted to share something with you guys. Today's election day, right? For 2020, and we got it just seems, just by looking at social media and the mainstream media, okay, it seems that there's this great divide. And honestly, statistically, if you look at everything else aside from what's on the news, everything is still normal. All right. So look into the lens, look into the camera right now and breathe with me. Because at this moment, you're in a place where you're going to be learning something that, regardless what happens in the office, what happens in Wall Street, what happens, everything that Ray talked about, and what Joseph Smith said, make your own economy. I love that. I love that so much because it is our responsibility to take our reins. And like I said earlier, I feel that it's because of our founding fathers and the way they laid the foundation of this great nation that it gives us the ability to grab the reins and make it ours. All right, because we the people. See, loud noises. So anyway, so today I wanted to give you an idea of what it looks like for when somebody uses the credit banking strategies, and some things may be out of our control since we're partnering up with whom we borrow from. All right. So when we talk about credit banking, the three things that we need are, debt, a we need cash flow, and we need a line of credit. Right. So that's been taught many times on our webinars and before us. And what we got to realize is that these three things, although we are a part of it, we are partnering with others to make these things work, right? In other words, debt, that's the bank. They're letting you or investing in you to borrow money from them so you could do something with it, okay? The cash flow, that is your job. That is where you're getting your money from. That is your clientele. That's your business. That's everything external, And then last but not least is, of course, the line of credit, where, of course, again, that's the bank. That's the bank that we want to partner with, and again, them investing in us to be able to use that particular bank product. So what if something funny happens to any one of these three things? Well, this is where I feel that most people who use a strategy, um, actually, let me go a step back. People who don't use a strategy, they're too worried about these three things. They're too worried about the future of these three things before they take their steps into taking on such an amazing strategy. And unfortunately, there's where a lot of people stop. They just all of a sudden float in that same realm that they were in for the last decade, and it's just turning time into dollars, and counting the calendar days away. And then, unfortunately, they go and start. Well, this is what I've experienced. I'm not saying everybody, but this is what I've experienced a lot of the times, especially when I'm meeting with new clients as I go in. When I was helping people through this strategy, those people who deny it and those people who just don't get how numbers don't lie, they're the ones that are worried about this, and they end up blaming everything else about their problems. So when it comes to the banking stuff, oh, that's the government's problem because the government, cash flow, that's their jobs, that's their job's responsibility, and that's not my fault that I'm not getting paid as much as I should be, or I'm not making enough money, and the line of credit, I got denied, or I don't want to touch a line of credit because it's evil, because banks are evil and they're out to get me. So, and I get that mindset. In other words, until they switch it over to being able to understand these three things, actually taking control of these three things and partnering with the entities that give you these three things, they're they're gonna, it's not for them. The strategy is just not for them. So my goal is to always give everybody the opportunity to start from level one and realize that it is for everyone, if you just partner, and if you just be grateful for the fact that these things exist. All right. So if things that are not under our control shift, I'm not going to say they're going to change or whatever. I'm just going to say they're going to shift. And let me tell you about the last time a major shift happened with credit banking. All right. One of the biggest shifts that happened was during the housing market crisis back in 2008, 2009. All right. And what happened then was certain bank product that was based on properties ended up shifting their, I guess, their structure. Okay. So I'm going to explain that to you here very soon if I were to be able to share my screen. Hopefully it doesn't crash on me like it did last time. All right. You see everything there, Ray?
Perfect. Looks good.
Okay, awesome. Wonderful. I did go through Zoom and they helped me correct all that stuff. So it's going to be
Nice.
awesome. All right. Here we go. So one of the biggest bank products back in 2008 and 2009 was the second position home equity line of credit. I don't want to say POS, home equity line of credit. Okay. Now, if you guys don't know what a home equity line of credit is, it's basically this. So here's your home. If I could draw that out nicely. And here is the mortgage that you may have on that property. So let's just call this the mortgage, the first position mortgage. Okay, so basically the bank that gave you this mortgage on this property, it's secured against this property. They got dibs on, just in case you stop paying, on the value of the property. And let's say this is what you borrowed from them. Let's say you got this mortgage down to maybe 60% LTV, or loan to value. So this is what the loan is, and this is where the value is, another 40% above that. Okay, so here's 40% of equity into the property. Now, what happened during 2008, 2009 is a lot of these mortgage lenders panicked. Okay. They're like, wait a minute, this person may have an issue paying us. So what they did was they started warning anyone who took out a loan on this extra 40%. So remember, this is already taken out by you for the first mortgage. This is the potential of you being able to take out a second mortgage or a second position home equity line of credit or home equity loan. Okay. So say they were to give you 100% back then, meaning they could go all the way up to 40%. And, so let's just call this $100,000 property value. What you owe is 60,000 because that's 60%. That's the mortgage. And the home equity line of credit is 40,000, which is the rest of the value. So 40% equity. So a lot of people were able to take this out on a line of credit or loan. Okay. Now, in the credit banking strategy, we're over here using this tool, right? We have so many options uh, to take a HELOC, take money out of it, put money back into it, and we this is how we just basically use our thing. In fact, we had people who use the HELOC against the $60,000 mortgage. They got $40,000 available, and they take it down to maybe do chunks at a time, $15,000-$20,000 chunks at a time, and then they just threw money into the HELOC and then took out what they needed. Now, let me redraw this value thing here so it's nice and clean. So here's the value of the property of 100%. And let's use this as our 60% mortgage. And let's use this as our 40% HELOC. Now, what happened was when the crisis happened, home values started dropping just across the nation. Not so much here in Hawaii. Hawaii wasn't so bad. If anything, more people just stopped buying properties. There were a bunch of these mortgages over here that were the adjustable rate mortgage, and these are the ones that were supposedly the predatory types of loans where anybody and their dog could actually apply and get approved for the whole entire value. And if you watch the movie The Big Short, check that movie out if you haven't seen it. It really does explain how these debts that were made on these properties were just basically sold to the bigger banks and turned into investments or tranches that they put together for these kind of like mutual fund type of things, and people would invest in them because they're always fictionally rated A ratings. And that's a scary thing, is the bank was doing their thing in that way, and so therefore they got punished and so on and so forth. But anyway, we get to the point where these banks are saying, whoa, housing market is crashing. We need to mitigate as much loss as possible. These guys over here, the lenders on the home equity lines of credit, were saying, wow, you're right, we need to do something right now, or else we may end up losing the money that we lended out on this. And unfortunately, this first position mortgage, if they went and foreclosed on the property, chances are, if the values are dropping, these guys would not get paid if the foreclosure happened, the second position. And so they started freaking out. When they freaked out, they ended up just freezing. They would just freeze the line of credit and then convert it to a monthly payment of interest only. Okay. Now, a lot of people who were using the credit banking strategy back then, when they dumped money, so let's say this is their checking account, if they dumped all their income into this home equity line of credit and then they ended up freezing up in the middle of the week, they're not able to draw any more money back out. So therefore, their checking account, unfortunately, was down to zero, and they had no access to that equity. So this is where I am letting you know that this is one of those things that could actually happen if the economy started doing what it did back in 2008, 2009. Do we see signs of that right now? Not Really. I'm just throwing this out there, speaking with other professional real estate investors and professional bankers out there, and getting the idea of what the mainstream media is saying. It's like, oh my God, foreclosures are this, foreclosures are that. It's not the same thing. The reason why is because the actual product itself is not as volatile as these guys were back in 2000, when they were issuing them out back in 2003 all the way to 2008. um, they're not this type of volatile banking product. These are
Those
actual,
ninja loans.
yes, these were actually the loans that were put out recently, ever since 2008, 2009. Those were correct loans. Those were the types of loans that are actually secured and easily feasible for people. And on top of that, nothing is stopping the consumer from contacting the bank and saying, hey, I'm dealing with a hardship during, especially with COVID-19. Can you give us some reprieve, or figure out something? And these banks are helping out. They do not want to run into this ever again. Okay, but this HELOC portion, chances are these are the ones that are going to be the first to get frozen, or first to basically say, hey, we need you to slow down on using this, and uh, we'll figure something out. So I want everybody to be aware that this could actually happen, regardless of how bad the product or how good the product is out there. I just want to make sure that you just are aware of this specific thing, that home equity lines of credit can freeze. They happen. This happened before. The beautiful thing about understanding these strategies, though, is that the relationship that you build with the bank turns into a conversation. So if a HELOC was frozen, you have the ability, especially if you're part of this group and part of this crew, to have that conversation with the bank and say, okay, you froze my home equity line of credit. So ask these questions. What do I need to unfreeze this? Okay. Because they're going to have to supply you with why did they freeze it. And if they froze it for no reason, then chances are you may look at your fine print on the home equity line of credit and everything like that, that they can technically do whatever they want with it. It's just that they're not giving you a good reason. You could have that conversation with them. You could have that saying, you know what, my bills are good. So I've never had a missed payment, never missed a payment. My loan to value is still low. So if you have that loan to value lower than 80%, I like 80% as that cushion is lower than 80%, still lower than 80%. And I just don't want to, lose you as a bank. Meaning that if I go ahead and move it to another bank or refinance it, I don't want to lose you as a bank, and you don't want to lose me as a customer, because you're secure here. So when we're using these strategies, you have to be able to tell the bank why you're worthy of this bank product, and just be able to move along. If they unfreeze it and they get back to normal, then awesome. If they don't, then this is how you're going to react, basically. So say, and this is going to look very familiar, say you now have this home equity line of credit frozen. Which basically means, honestly, it turns into a loan. It's no longer a line of credit. It's one way now. You can't draw anything out. What I have as backups, aside from my home equity line of credit, is already I have personal lines, or business lines. And all of a sudden it turns into this strategy. So here's our checking. And I've shown this many times in our videos of movement of money, right? where instead of the HELOC being the one that we dump money into, we're going to be using one of our personal lines or business lines to be able to do this. So, in other words, if you are ready to be prepared for this, go ahead and open up another personal line of credit, leave it empty until something like this happens. Just use it as a reserve, or if the bank wants you to use it just to show that you're having activity on it, then go and get yourself, I don't know, like buy yourself some groceries and pay it back, the way you would in any other way, just to show activity on it. But all in all, it's basically, let's say if this HELOC has a $40,000 debt on it, you're just going to take chunks of it from the personal line of credit. Instead of this personal line of credit's $10,000 line of credit limit, you just take $5,000 paid from the personal line of credit to the HELOC. This brings it down to 35, and you go ahead and do your sweeping of money into the personal line instead of the home equity line of credit. So now all of a sudden, you're basically just chunking down the HELOC and then hopefully you'll be able to revisit to this conversation again, that you have brought the LTV even further lower than 80% by using this chunking strategy, using the personal line of credit, and therefore can you please free it again? Or if the economy did shift back to prosperity and everybody is not fighting each other, then they would basically give you that option to unfreeze it or keep it as a loan or whatever. All in all, it's basically this. Being prepared means, especially when you're using credit banking, is be prepared to use other strategies of credit banking, not just one. Okay. There's many other ways to do this. But I'm just showing you just this one option real quick, really easy option of having that personal line or business line on the side. And if the HELOC does freeze, you go ahead and start using the chunking strategy on the personal line from the HELOC. And then eventually be able to revisit the bank and saying, hey, my LTV is lower. Can you please unfreeze it? Or can you at least give me a different line of credit? Maybe that the value went up and you could actually draw out more, whatever it might be. Just get to that point where your relationship with the bank is good, and you have that option to speak with them. Okay, so that's just one of the banking, just the line of credit and the debt strategies that we talked about. If it's not under our control, this is how you shift towards that. Okay, now any questions on that right now? Because it may be a little convoluted for a lot of people who are new to this, but for those who've been following and those who may already know the velocity banking strategy or the credit banking strategy, this should make a little more sense to you. And that's the reason why we do this on video and record, so that way you can pause and rewind. It's a beautiful thing. But anybody have any questions on any of this stuff so far?
As people are thinking about their questions, I got one too here. So since it's secured to the property, it's a little bit different than when they close or freeze a credit card that's unsecured. Correct?
Yes. Okay. So understanding that the equity is secured against in second position for this particular strategy, it may be a little different, but the last thing they want to do is just close it and write off the debt that you have on it, because there is a security on it. And honestly, they should have no reason if you're keeping up with payments, right? So we're going to get into cash flow and income right after this. But they should have no complaints about it. They should have no issue with keeping it open with you. So, just again, it's just about being aware and having that relationship with your banker and with the bank to make sure that this is mitigated as much as possible, especially if you're going to be actively using this strategy. But the cool thing is being able to shift from using a home equity line of credit to a business line of credit or a personal line of credit, or any other kind of line of credit out there to attack the frozen one. It feels a little more comforting to know that you do have next steps in case something like this happens. I've had so many people who just didn't want to do this in the first place because they were scared of something like this. It happened to them before. Back in 2008, they had a Homemaker line of credit and it got frozen. And then it turned into this very scary thing for them because they did not know how to do the next step. They were just taught how to use that one line of credit and nothing else. So what I'm saying is using the same strategy with different product against that line of credit will open up more realm of possibility for you. Right.
Beautiful. That's so Nick kind of has a question that goes exactly along with this. He was asking, what other lines of credit are there besides HELOCs?
Great question. So we talk about these quite a bit. There's let me start with the the common ones, I guess. Number one would probably be credit cards. So credit cards are lines of credit. You know what? Let me just kind of like put a definition out there for a line of credit. Okay, a line of credit is a bank product that is revolving and lended to you. All right. So you could take this line of credit definition and then relate it to savings accounts or 401k accounts or just regular checking accounts because it's a bank product that's revolving. The only difference is a line of credit from the bank is lended and they will charge you an interest on it. But on the plus side as well, they will report this to the credit bureaus and everything as well. Your savings account line of credit, your 401k line of credit, and a checking account line of credit, if you call it that, do not report to the credit bureaus. So that's so credit cards is number one. Number two is cash lines of credit, cash personal lines of credit, or just LOCs. It's basically like a personal loan, but it's revolving. A personal loan is basically you borrow money and then you pay it back with principal and interest payments over a period of time, and there's an end to it. There's an amortization to it. On a personal line of credit, it's basically the same thing, except that there's no time limit to it. As long as you make your minimum monthly payments per month, and you have up to this amount to borrow with, and you can pay it down and then use it again, pay it down and use it again, much like a credit card. So there's a limit and all that fun stuff. Number three is a business line of credit. And if you're looking for this type of product, then you're in the right place because you talked to Ray about opening up business lines and business credit. Then you're going into an amazing realm of possibilities from there. And then we'll go into more of the obscure ones. So there's a commercial lines of credit. Now, commercial lines of credit generally are secured against something of business value, something that a business may have, such as a building or equipment. I've actually seen, or I've actually helped construction workers out here who own, their own excavators, their own dump trucks, and that's their business that they run, to open up a commercial line of credit with the local banks over here, and they would secure it against that equipment. Right. So much like a house, they just use the equipment as collateral and they're still able to use the equipment. Right. It's not frozen. And, and then they're able to open up the line of credit and work from there. And, it just goes on from there. I mean, I've seen people use lines of credit based on stock. So if you have like my buddy who works at Microsoft in Seattle, in Redmond, he has the option to use Microsoft's Federal Credit Union to open up a secured line of credit against his Microsoft stock, right? So if you know somebody who has that kind of who works at this kind of big company that has high stock amounts, my buddy from Intel has this when he's out living in Portland. My buddy from Microsoft, these big companies. Boeing FCU actually offers this for Boeing stock. You can actually do that, right? So there's all these different ways: unsecured, secured, lines of credit, business lines of credit, Homemaker lines of credit, building lines of credit, all these different types of lines of credit are there. They all work the same technically. They're revolving, put money in, take money back out, and they charge interest as you go. The beautiful thing is that these tools right here, um, well, they're accessible. They're accessible by everyone, honestly. Even people who have poor credit, they have the ability to open up secure lines of credit to build that credit back up. That's actually one of my favorite things to train on, is helping people who have no credit or bad credit, or improvable credit, so to speak. Again, it's never going to always be bad. This is the cool thing about credit too, is that you have that opportunity to improve it. Even if you have bankruptcies or foreclosures on your record, this beautiful country of ours gives us that ability to fail and get back up again. And that's how bankruptcy works, right? You may have failed at something, whether it be your personal finance or business finance, and the country gives you that option to say, hey, let's help you wipe the slate clean. Now, the banks are going to know that you had to do this for a while, but until then, let's help you build your financial life back up, right? So take that option and do it if you really, really need to. So I've helped people through that. I've helped people through using these lines of credit or secure lines of credit to improve their mishaps from the past. So regardless of who you are, you have this ability to qualify. You just have the right steps to make it work. So those are the types of lines of credit that are out there.
Nice. Excellent.
Long
Good
story
stuff.
short. Okay. Any other questions? No, we're good.
No, not as of today.
Okay,
or as of right now.
Let's. So we talked a little bit about how the bank, their qualifications or what they do to their line of credit, right? Like that tool that you have, if they shift their structure, whether by freezing it or dropping the limit or eliminating altogether, it's up to us on how to be prepared for it or how to react to it. Okay. I'm not a big fan of reacting, though. I like to have things prepared up front. And you know, I've heard so many times people about excuse me, about their doomsday scenarios when all the banks will fail and we'll go back to gold and silver and all that fun stuff. I've heard that for decades and everything is still cool. This whole Bitcoin thing is turning into this big thing. Again, we'll adjust when it happens. So for me, just being prepared for it is, it just basically means being knowledgeable about it. And our currencies, right? Our time currency, our money currency, our knowledge currency, and our relationship currency. These are the currencies that you're going to be trading for if and when something like that were to happen, this whole collapse of the economy or whatever. These are the currencies you're going to need to use, right? If you have very little money, then you're going to be using time to make that money. You're going to also learn how to make sure you solve people's problems with knowledge. So this is going to be your solve problem currency, because when you solve problems, you get things back. The relationship currencies, these are the things that you're going to be counting on for, because right now this is what we do. Even credit scores is relationship based. All right. So on the online data through FICO, Equifax, TransUnion, and Experian, these credit scores are telling other banks your relationship with other banks. That's basically what that means. So your currency for relationship is going to be very, very important in that aspect, as well as who you can connect with to make things work, right? And of course your time, the hours that you spend to make the money. These are going to be things that you're going to be relying on if and when that happens. So let's go to say your cash flow goes down or gets depleted, you lose your job or whatever may happen. Okay. Now, this is where your knowledge and relationship capital come into place. If you do not have these, I really, really would recommend you start working on them right now. Okay. Your knowledge and your relationship, currencies or capital, are the things that are going to help you solve these problems when they come up. So when we're talking about someone who loses a job, if that job is what you counted on for your income and nothing else, then you're not prepared. All right. This is the reason why so many people are picking up side hustles or doing, other things, investments, real estate. But unfortunately, there's a lot of people who don't want to count on knowledge. They just want to listen to other people and trust other people's knowledge to get into, well, unfortunately, scams out there, right? Like I had like when Bitcoin was going nuts a couple of years ago, I'm over here preaching knowledge. Hey, learn about what it's doing. Don't just trust other people's word. And that's all they did was like, yeah, but I don't have time for that because I'm in my job and I'm focusing on my job and this is my main source of income and I'm trying to get another source of income. So I'm going to listen to this guy because he makes it sound so good. And sure enough, they go ahead and pop money into these so-called computers that they build out in Vegas, and they mine Bitcoin for you. And you're investing in the computer, not the Bitcoin itself. And I'm scratching my head, saying, "Yeah, that sounds legit. I mean, let me look at this pamphlet that they gave you that makes it look so good." And I'm over here thinking to myself, "What's your due diligence?" And they're like scratching their head, "What the hell does that mean?" They never proved that there was such a thing as these computers out in Vegas being built to mine Bitcoin for you, and so therefore they dumped a bunch of money into it and lost it all. These guys just disappeared, and I haven't heard anything about it ever since then. Big mistake. I asked about it too. I asked my friends about it. They're all like, "Oh, it was just a loss of some money. It's no big deal." Like,
I want to know how much they got because there was a lady here in our group in Tucson who was telling me about that. And she's like, "Oh, it's going to be so amazing." I'm like, this is a real estate investing networking. Like,
yeah.
Bitcoin meets down the street. Like, I just don't know anything about it. I'd totally get into it if I understood it.
Yeah. And unfortunately, it's almost to the point where it's like if you weren't part of it from the get-go, then you're not going to ever be part of it. It's already too late. This whole entire thing of FOMO, fear of missing out, is what people are relying on when it comes to selling these types of unfortunate products. And so people are over here saying, well, I got my job. I'm counting on my job. This is the thing that I need to make money and put food on the table and put clothes on my back and keep my family warm and so on and so forth. And I don't have a backup. So I'm going to listen to some people and not look at my knowledge and not work on my knowledge and relationships. I'm just going to listen to other people. That is a bad way to prepare for anything shifting in our economy. What you should be preparing for is actual knowledge, actual, provable due diligence knowledge to be able to solve the problems that do come up. Otherwise, you're just relinquishing that responsibility on somebody else, and you got nobody else to blame but yourself for doing that. So, just being real, just being truthful. So, this is where it comes down to: you have a job, then go ahead and invest in some knowledge here. Get knowledge on. Sorry, I've spent this. I spelled knowledge wrong, Ray. Get. Uh,
Need one of those autocorrect whiteboards.
I know. Are there such thing? I think there is. Yeah, that's crazy. So, invest in your knowledge. Invest in the ability to get into something that excites you. All right. Something that genuinely excites you, not because somebody tells you it's exciting. Because Bitcoin, it was exciting, wasn't it? It was this big thing. Oh my God, one Bitcoin. If you invested it back then in 2005 at like 0.0012 cents and you just put $5 into it, you'd be a millionaire right now, blah, 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 right? FOMO is the easiest way to get somebody to spend money on them. So, and when it comes to knowledge, right? Actual knowledge, because it's not instant gratification in a world where we get our news just by one click of of an iPad or an iPhone, right? I could say that because I'm an iPhone owner now. Or if or you, right now, oh, I want to watch a movie. You don't need to wait until next Tuesday when when The Big Short airs again on HBO or whatever. You could just go to HBO Max and then click, boom, you watching the movie right now. Everything right now is instant gratification. We're brought up in a world of instant gratification. But you know what's funny is that all those technologies and all those things that brought us this instant gratification, you got to realize how much hours of not instant gratification these guys needed to work to get these things together for us, right? So the knowledge is what's going to solve those problems. And this is not instant. This is hard work, okay? This is the good old fashioned get your brain on, get your hands dirty, get your elbows greasy, whatever it might be to move forward in this. All right. The next thing I want you to actually focus on is your relationships. Okay. Now, I'm not talking about the relationships that you currently have if you are, focusing on, the people who are at your level and are just counting on the job. I'm talking about getting yourself involved in, relationships that where I think the saying goes something like, if your five closest friends, if you surround yourself with your five closest friends, the average of their net worth is your net worth. Okay. So the average of your five closest friends' net worth is your net worth. In other words, if you feel like you're the richest person in your group, then it's time to move to another group. I'm not saying ditch them and not be their friend. It's great to have a coffee and a beer here and there. But if you want to start really talking about how to shift your place in life and your place in finance, then it's time to upgrade your closest friends and get into a network that gives you that ability to use these relationships and turn that into money. All right, this hard work or this knowledge, you're going to be able to build those relationships with that knowledge. Believe it or not, say you one of my first I guess you could say lenders that I ever got to really talk to about real estate investing and lending me the money to invest in real estate. He was this guy that was always the guru of finance to me. He was my supervisor at Oceanic Time Warner Cable, and I was able to teach him the velocity banking strategy. Okay, so this is how I felt. This was me, and this was him. This is how I felt before, back in 2012. I got my knowledge on about the velocity banking strategy in 2013, and then I taught him, and this is how I felt next to him. Then I started
That's so
taking
cool.
real estate classes, and I taught him more things. And this is how I felt with him. That's me, and that's him. Okay. That knowledge improved that relationship. I was the little guy before back in 2012, looking up to this guy and saying, wow, this guy got it made. He's doing some amazing things. And then when I showed him Velocity Bank, he's like, oh my God, we are equals, guys. We are equals, and you're talking the same language as me. Let's talk more. Let's oh wow, you're doing real estate? Man, I want to work with you. And we have been since. So is that was that like a did I put in more hours at work to earn that ability to grab that money and make more money for myself? Did I count on some job? Well, I met him through my job, but I left the job and and then now we're working together as business owners, right? So I feel that your knowledge and your relationships, your knowledge first will create those bigger relationships for you. So that way you can now speak on the same level as these other, so-called financial gurus, or these people who got it, who you may be looking up to and saying, wow, you're amazing at finance. I wish I knew what you knew. I wish I was as lucky as you were. See, that's not the case. It's what they knew, right? It's not because they're lucky, it's because they were ready. Difference. There's a big difference between luck and ready. And I want you to be ready, not lucky. Uh, so if you were to run into a situation where you lost your job, these are the things that you're going to need to count on: that knowledge in your relationships. Okay. If you already have that process of going, you're in a job right now, get knowledgeable right now. We have amazing tools through Wise Guys and Ties to offer you, so that way you can get your knowledge on and be able to level yourself up to that experience point where your relationships will grow in that sense anyway. And it's not wait until you lose the job to make that happen. It's right now. Do it now. Not, oh, when the economy collapses, then I'll worry about it. Or when Biden or Trump take the office for the next 4 years, it doesn't matter. Not then. Right now, work on that knowledge. I've been getting up pretty much every day, just learning new things, just so I could actually have these conversations with the people that I want to grow in my circle. And I still have great friends beyond that, or behind that. I still hang out with my buddies who I played music with. Their net worth is like well below mine, but they were my friends since high school. And all I can do is basically share what I know to them, so maybe they can level up. But if they don't take that responsibility and say now is the time to go ahead and get that knowledge and that and build those relationships, then I can't help that. Let's just keep playing music. you know so that's how you correct the money situation. If your job goes away, or if you lose your pay, then already have these things in place if and when that happens. Okay. Because right now I'm just like feeling, wow, I don't have a job, and my sales and marketing income has tanked ever since COVID, but my real estate is doing very well. Okay, well, that's how you want to do it. So have those backups of backups of backups as you go, and it all came from my knowledge and my relationships to make that happen. So, any questions on that?
Man, that's good stuff, though, Richie. It's important to hear. And I know half of the folks on here needed to hear that. The other half are like, yeah, I'm totally there. That's where I want to roll. And I just encourage everybody, if you know somebody that needed to hear that, share it with them, because that's the best thing we can do, is help friends who are there. And sometimes they just don't listen to us. I'll tell you, I've lost a lot of friends as I started to um, kind of elevate myself.
Mm-hmm.
I lost a lot of friends because, when you're comfortable at a certain level with each other and then somebody starts to move, it's now uncomfortable, and it makes them reflect on themselves. Well, wait, what? What's Richie talking about? What's Ray talking about? Why? What? Paying down my mortgage? Wait, what? We're not talking about this or that anymore. And what it was is I had to hear that from somebody else first, because I wasn't ready to hear it from somebody I already knew. Because that's just what it is. The people that we know and love, they're closest to us, they know us at this certain level. And sometimes it takes somebody on the outside to open up those eyes.
Yeah.
So I encourage you guys to share this event with them, share the YouTube channel with them, help them level themselves up as you continue on. Because unfortunately, I stayed quiet for a while as I journeyed down this road. And a year later, when I actually started talking to people, they didn't even know who I was anymore, honestly, because Things were just so different.
Mm-hmm.
I was filming so for those of you that subscribe to our YouTube channel, I have a video that's going to be coming out tomorrow, where I'm actually inspecting one of our rental properties because we had a tenant that moved out today. So it should be pretty cool. I go through like, what you want to look for in your property and everything like that. And we had bought this from an investor who's, I think he's in his mid 70s. He's tired of the investing game and he had gotten out. He still owns a few properties around there. And so he was actually driving by as I was over there kind of filming some footage. And he's like, "Oh yeah, hey Ray, how you doing?" And he was telling me about everything he's going on. And he said, "Oh, I got this house and I'm selling it up by the mountains. $800,000. I'm selling this house. I bought it at a foreclosure a few years ago, turned into a rental. Now I'm selling it. Gonna be sitting on $800,000 in my charitable remainder trust."
Ooh.
He's like, "I gotta do something with it." He's like, "Go find a deal because I need to do something with that money." And then I'm sitting here, because of that relationship, did $800,000 just get thrown in my lap? Basically, if I can go put that to work. And that doesn't require any credit checks. It doesn't require any loan applications. That is a relationship that's been built. But that didn't happen from day one. If you would have told me that 5 years ago, I'd be like, "You're crazy." But hanging out with people like Richie and Joseph and so many others, it will happen. Just be patient, because as Richie was talking about instant gratification, we just want it too quickly sometimes. And unfortunately, this isn't get rich quick. This is not get rich quick, but it is get rich for sure.
For sure. Again, I mean, just think about the hours that it took for all these engineers and these programmers to get us into an instant gratification situation that we're in right now, with all the comforts that we have. I mean, I got a cell phone that controls my air conditioning now from distance, right? If I wanted to shut my air conditioner off in the house, I know you guys in Arizona would love this, right? And just to save some energy, but then oh, it shows on Google Maps that you're 10 minutes away from the house. The computer already says I'm gonna go ahead and turn the air conditioner on because Richie's 10 minutes away, so I can be nice and cool when he walks in. See, that's the kind of society that we live in right now. But imagine how much hours it took to get that going, how much years it took to get that going. But it came from an idea, it came from the relationships, it came from the knowledge to create that. In our life, of being able to solve people's problems and fill a need, right? Because whenever you run a business, that's the first question you should be asking yourself: what need will I fill? Right? Really the main question you should be asking yourself, because if you fill that need, people will pay for it. And in our case, if we're trying to fix an income situation, get into that realm of possibility, get into that realm of problem solving, and therefore you won't have to worry about the job paying you anymore. You could do this on the side. You could do real estate on the side. That's what I do. I do real estate on the side, guys. It's not my main focus, right? And it gives me that ability to say, well, you know what, I'm going to take Christmas off this year because we did so well with real estate this year. I'm just going to focus on that, and then I'm gonna do these meetings to help people, you know, get better at their finances through credit banking, velocity banking. And if you have those needs filled, and that money coming in, then you won't have to worry about those minimum payments on your credit banking strategy. You won't have to worry about keeping up with the bank and everything like that, because that money is just going to keep rolling in because you fill a need. So knowledge first, build on those relationships, and getting that need filled will make you the money that you need or want to create the life that you want. That's I'm off my pedestal.
Well, that was good stuff, though, Richie. Thank you so much for sharing with us tonight. these pitfalls. Really, these are potential pitfalls. It's also, we got to know who we're dealing with. We got to know who we're playing this game with and against. And so that's a crucial aspect. And it's not all beautiful. Like, we're always talking about, oh, get out of that so quick. But at the same time, we have to also be reality. Like, hey, there are pitfalls. We need to be cautious of those, or conscientious of those, and have 1, 2, 3, 4 backup strategies and plans how we're going to get out of this deal. Just like real estate, you just don't go in thinking you're going to be able to just flip it. What happens if you can't? What if you have to hold it? How can you convert, shift, and knowledge and the ability to adapt to new situations is what's going to save you. So, oh man, I think that's good for today. I don't see any questions, but I'm so grateful for everybody who joined us here tonight. Anybody have any questions before, we got big shout out to Daryl, we got Deanne, we got Dennis, we got Felicia, we got George, we got Jimmy, we got Kelvin, we got Nick, we got Toylin. We got a lot. We had a bunch of folks on YouTube as well. So that's excellent. Now, I'm going to go ahead and share my screen real quick, because those of you who are on the webinar already have been here. Let's see, we got a question. Thanks for tonight. Hey, Nick, thanks for being here, buddy. For everybody that's in the webinar, I know you've already been here, but just fresher, over here on the Wise Guys and Ties website, under the events tab, can register. Go ahead and, the Credit Banking Mastermind, send this link to a friend, send it to a loved one, send it to somebody and say, hey, I would like your opinion on what these guys are talking about. That's all we say. So it's new concepts. You have to get outside our comfort zone, but help your friends help themselves. So that's all we really ask of all you folks as of tonight. Of course, reach out to us. And other than that, Richie, I think we'll see everybody next Tuesday.
Yes, sir.
Same time, same bat channel. And regardless of what happens in the next 48 hours, make sure you tell your friends you love them, and you be kind to one another. Everybody's stressed out. So crack a couple jokes, and everybody just get something funny and put it on social media, and that way you can kind of alleviate some of the stress that everybody's facing. Good night, and God bless.